All right, welcome to another episode of JYR Trades. I am your host, Jesse, and what a day! What a day it was today on Wednesday, April 22nd. Market reached an all-time high, and all I can say is that the more you look at the market, the more you're going to learn. Okay. Now, with that said, remember that everything that I post on this channel, guys, everything that I post is for educational purposes. Nothing is financial advice. Okay. However, if you want to learn market structure, if you want to learn auction theory, equilibriums, liquidity, how to trade like the big institutions, then this is the right place for you to be in. As always, guys, if you want to join me on this journey, and this journey I started for one purpose, so that I could actually journal. This is my journal. This is my way to go back and to learn, to look at my notes. My video journals are my ways for me to remember the setups, for me to remember what the market taught me that specific day, to go back and look at it. It's always going to be there. And to look at my own mistakes and how to learn from them. All right, if you want to join me on this journey, please hit that subscribe button. If you haven't joined me yet, it would mean the world to me. If you want to like, share, and comments, I would truly appreciate it. I would love to hear from some of you. All right, guys, so let's go ahead and get started. Okay, as always, guys, today I'm going to give you guys a quick description before I get into it. All right, today wasn't about profit. Okay, it was about understanding. Literally, that's what it was about today. In this breakdown, guys, I'm gonna walk through how I identified a trap expansion set up at the New York Open and execute it with confidence. Okay, using market structure, guys, I was able to identify liquidity, session context, and I was able to anticipate the move before it happened. Literally, I was able to anticipate 3 moves, okay, throughout the day. I took 3 trades. They were all green. Probably one gave me some drawdown, okay, and that was the very first one. But after that first one, every single one of them was literally very little to no drawdown. Okay, guys, again, like I said, I was able to anticipate the move before it actually happened. This is the shift from guessing to actually knowing. If you're serious about learning how price actually move, guys, then this video is definitely for you. All right. Now, first things first, guys. Today I didn't guess the move. All right. I knew exactly where price was gonna go before it moved, and that was the beautiful part of it. Okay. I actually knew that. Okay. All right. So let's look at the screen here, and this is right before the New York Open. Okay. And one thing I want you to, the first thing I'm going to ask myself is, where are we? All right. Are we inside New York value or outside New York value? Okay. If you've been following my channel, you know that my New York value is determined by 2 white lines. Okay. And you can see that I got New York value area high here and New York value area low here. Okay. So right off the bat, guys, we are outside, either for a potential expansion, continuation, or a repair that could possibly turn into a rotation. Okay. Now, so we understand that we're outside value, so that's half of the story. The other half is, where are my POCs and where are my mids? Okay. First things first, right above my New York value area high, you have my Asia mid, which is this blue section here. We have the mid right here, this blue line. Okay, and then right above it, guys, we have the POC that was belonging to that specific mid. You can see this red line here. This is my fixed range volume profile tool that measures the beginning of this to the end of this particular session. Okay, and then the next question is, where is Asia? London. Well, London, we have our London mid right here. Okay, we have our London mid. Okay, and then we have our POC. So this is what I said to myself, literally. Okay, that first things first, we are above value, New York value, so the potential is bullish, and we have a liquidity stack right here. We have one POC and one POC, but more importantly, guys, you need to understand that we have a one mid outside below the POCs and one mid outside and above both POCs. So what that is telling me, guys, is that the market was going to do two traps before it decided to make its move. And right now, again, we have a potential expansion to the top side. Okay, all right, so here we go. So how does market open? Let's take a look. Let's zoom in here, because this is very critical for you to understand. Okay, now I need you to understand that immediately this particular candle did spike up to the top side here, all right around here, but then it started coming back down. So what did it do? It trapped buyers into believing we were going straight up. So what did I do here, guys? I literally entered to the downside, and I'll tell you why. All right, what I saw here is that we had one POC here, one POC here, and we had one mid to the downside. So that, to me, what I understood was that trap was going to go to the downside first. Okay, that's what I understood. So as soon as when I saw that price started to move down, I took a short. All right, and what did I target? I targeted the first POC, which was this red line. And as you can see, price came here, almost got the second POC, but it did not. Okay, and shortly after, maybe I want to say at 7:38, we had our migration, our post migration. This is a previous zero, auction zero. It migrated here, and what does price do? It decides to again create a trap. Now I said to you earlier that we have one mid above both POCs here. To me, this was the second trap. So it made buyers think that it was going to go long now. And what does it do? Once it came back to a certain spot, okay, it started coming back down. At this point, I decide to target. Once I saw that we were coming back down, I target another short. And this short was particularly to the POC, the second and final POC, okay, above value. So I literally put my stop loss, my take profit here. And what does it do? It hit it right on the point, right on the money. Okay, now I will tell you, I could have put my take profit here on Asia mid, but I need you to understand that the market moves in sections. All right, and there was enough liquidity here, and at this point I wasn't sure if it was gonna, I knew it was gonna, if it didn't come all the way down here, I knew it was gonna start turning around, okay, and that this could possibly be the other move. Okay, now there's, at this point, when market gets back to auction zero, it's decision point here. Do we come back and get the rest of the liquidity here with this mid, or do we start expanding to the top side? All right, now I'm going to tell you right now why the market did not come down to the Asia mid on the second time around. And the reason why is because by not going to the Asia mid, it basically created a trap. It created a trap for short sellers that were thinking it was going to come all the way down to the negative 62 on the fib, all the way down to New York value area high. And guess what? It trapped. And when do you turn around? Now, if you were thinking that it was possibly going to come back down here, there was that possibility, okay? But once I saw, guys, that price, okay, once price, okay, rejected back in auction zero, this green, and it started going up, okay? I need you to understand, this is my Rematar cloud here, okay? Once price started going past this green line represents New York open. It went past it, came back, rejected, and it started getting away from New York opening. All right, this wasn't just a line, this was the trigger for the big move of the day. All right, so the first cross was the test, pullback, confirmation, second hole. This was the go. Okay, again guys, first trade was to the POC. I waited for it to come up here, came back into the cloud. You'll notice it came back into the mid of the cloud here. Okay, this is a danger zone, to be honest. This is a no trade zone for me in this area here. Once it started coming back down, I targeted the second POC and it was right on it. I probably put my take profit a little bit before it just to be on the safe side. It hit it, and once I saw that price, all right, had opened literally above the right above the cloud here, this green line, and it held, it was my goal. It was my goal time. It was literally the trade of the day. Okay, now guys, the move here, I need you to guys understand this. These weren't guesses here. All right, when I went from here to here, when I saw market structure and I saw what was going on, I saw that we had two mids. Okay, two mids on each side. In the center we had the POCs. I knew it was going to create a trap both directions. Created a trap here, created a trap here, created a trap finally here, and then this was the move. Okay, these were reactions to structure. These particular trades that I took were reactions to structure, the way I read it, the way I understood it. All right, and as you can see guys, overall price, I mean, my gosh, kept on going. All right, went all the way to the 175. We had some compression after that, and what does it do for New York PM? Okay, whoa, hits past the 2, continues to go, and we hit an all-time high today. Okay, now I will tell you guys right now that I had you know, because of work and whatnot, once I went into my trade here, I targeted the 1. I couldn't be in front of the computer, I could not monitor the trade, so I didn't want to take a, you know, I didn't want to take a hit. So I literally stayed, you know, I took my take profit at the 1. If I would have been in front of the computer, I probably would have stayed with it. I would have taken a partial here and would have continued going probably to the 1.5.
There's a reason I trust my shopping list with
would have taken the 1.5. Overall, guys, the reflection for today is really simple. Is this? Today really wasn't about the money. That's not the thing. Okay, it wasn't about trying to get a bigger P&L. It was truly about understanding. And then once you start to understand this process here, okay, the confidence is going to come naturally. Okay, I'll tell you, when I first took this first trade, I was a little bit nervous. Okay, and it's normal. But when I saw the structure, I'm like, okay, I've seen this before. It's telling me it's going to trap both ways. And right off the bat, I'm like, the liquidity is to the downside, so it's gonna come down here first. There's no liquidity above us. It's gonna come to the downside first. So the first trap is gonna be to the downside. So what do I target? I didn't blindly go into the trade. I targeted the first POC, and sure enough, you can see that that's where it went. Price started coming back up. All right, came up to around the 25, maybe, actually no, probably right at New York open. Okay, what does it do? Start coming back. I took this trade, and I said again, target the second POC. I don't need to target the Asia mid. Why? Because by not going all the way to the Asia mid, it's gonna trap short sellers. Okay, all right, so this is pretty much it for today, guys. Keep reading market structure, keep going, looking at the signs, look at your POCs, look at your values. Where are we opening? Are we opening inside or outside value? What are our mids telling us in reference to our POCs? Okay, and now I will say one more thing that I did today. All right, I think this was huge because I forgot to and I just remembered just now. And this is something that I learned in the last couple of days. Okay, so we have our mid here, POC here, and mid here. So one thing that I did, guys, okay, I took a fib, okay, and I measured that stack liquidity from top to bottom, that they were stacked, they were close to each other. I want you to notice something here. All right, I measured it and I said, where's the halfway point? Well, the halfway point is here, the 50. And if you look, that first particular trap went to the 50. All right, and came back up. So, and I had this fib already set up when I took the trade. I just took it off later on in the day so I wouldn't have it all cluttered here. But I went with the safe. First instinct, and that was the POC. I can tell you right now that probably if tomorrow or whenever we have this similar setup again, and we have a stack liquidity, okay, measure it, put that 50, and probably price is gonna go there at some point, whether it's in a trap or whatever the case might be. Look at it and see if price goes to that 50. Okay. Alright guys, so this pretty much covers everything that I covered today. As always guys, it would mean the world to me if you join me on my journey, you hit that subscribe button. I think together we can learn. We can learn to become better traders, and I'll tell you, if you stick to it, something's gonna click. Alright, with that said, till next time.